good morning, good afternoon, good evening. No clue what time you're watching this, but it is October 19th. It is 10:46 a.m. over on the East Coast. It's nearly midnight over here. And I have for you on the screen here the weekend Wall Street, slightly accurate, but at least it's something to look forward to. Looking at the futures as we approach 6 p.m. over there on the East Coast on the United States. The Dow futures are pointing right now at a fractional little dip of about 36 points. Earlier, before I started, when I was doing a little bit of prep, they were up about 23 points. And obviously, a lot can change, as you saw there on Friday. So, quick update for you. Wasn't really a typhoon, was more of a low pressure system that we had coming over us on Saturday, but it was enough. It was enough to knock out the power last night right around 10 p.m. and the power and the internet came back on around 7 a.m. this morning, Sunday. And as far as I have gone out and looked at my forecast, I don't have anything on the horizon that's going to be coming towards me. However, you are reminded that when typhoon season kicks in over here, a week, just a little bit more than a year ago. Yeah, a year ago, I got hit with that 50-year flood, and I had no power for a week. So be aware, we're always tracking the weather systems over here as things go on with that. But listen, before I even get started moving forward, just give you a little reminder. If you're not following me on X, go ahead, go over there, just click follow. It's no big deal. It's not going to cost you anything. Might take 30 seconds out of your day. And if you're not already subscribed over to the YouTube channel, by all means, feel free to go over there. Just click the subscribe button. You don't need to like the videos. I really don't even fucking care. But it does bring on a tiny little bit of a change of what has taken place here recently. And again, because I try and put my heart and soul into this and make every effort that everybody can get the most out of their life. Not out of being here for a month for all the people that come over and kick tires, but out of your life. Because, like me, I celebrated the weekend, Saturday and Sunday. Well, theoretically, if I live to be 70, I'll have 882 more of them. And I'm going to make the most out of every single one of them, believe me. But I want you to be able to get the best out of it all. And as we switched over from Slack, over in September, over to Discord, it wasn't my choice to do this. As I mentioned, was due to be partnering up with persons, one of which who I had been doing work with for better part of 2 decades. And if I wasn't on Discord, there was no way in the world that this group would grow. And what I mean by grow is more members. And I've always wanted more members because I want to be able to help as many people as I can. But when I talk about having more members, I'm talking about, like another 100. The business model that they had thought of or, was presented to me was to be bringing in 500 people a month. 300 people quit. So what? Next month, another 500 will come in. 300 of them will quit. So what? Another 500 the month after that, and build it up to be, 1,000, 2,000 members, which, as all of you who have done one-on-one calls with me know, I take this personal between you, the trader, me, the trader, just with me having a little bit better of a vision because other than, repotting bougainvilleas or planting 40 pineapples like we did yesterday, I don't have any disturbances or anything to distract me in my life. So I'm pretty good at what I do, as you saw last week. But anyway, I'll bring you on to last week. Again, asking you about if you are in gold. Well, you got 40% in a day. The November 21 to IWM 240 puts. You got a little bit better than 40%. Google Oracle, the November 21 Oracle 290 puts. Once again, a little bit better than 50% on this trade in a couple of days. Google, they report earnings in another week. So this is, well in advance, the discussion on Google, but I've shared the chart with you and the rationale behind the chart and the reason why of getting into the trade here for Google. But I bring you back here and just revamp you here onto Friday, because on Friday, I sent you out the email, SPX 6555 had arrived, a little bit less, and talking about, our awareness being it's OPEX Friday. And the video I shared with you, which I don't think too many people caught on with, was Ace Frehley doing the Star Spangled Banner at a motocross event in 2010. And Ace Frehley had passed away Friday night or Friday morning. Again, just to prove to you that regardless of how famous or how much money you have, we've all got a certain number of days that are left in front of us, so why not enjoy them instead of just, being a part of it? Standard email, talking about the SPX Great Depression fibs rebreached, which I've covered in detail in prior videos, the October candle, the 5 green months, and, bring you back onto it. Looking at the October 17th, looking at our Fibonacci spiral, October 17th being the low, October 22 being the high that we're due to place over the next couple of days. And then coincidentally, it just times out perfectly that your next event is going to be on October 30th for a low, where you have your FOMC meeting, you have your Trump President Xi meeting, you have your Trump Putin meeting, and you have the end of the month. So again, for a perfect ABC, 6510 fits perfectly, which I'd still consider this very, very much like what we have in 2018. Like I said, you can put a gun to my head, and this is what I have to say. The bond market's never flinched. It's been acting exactly as a market correction would act. And now with the SPX due to produce, it was due Friday morning, a second red weekly candle as we go into big name earnings. Today would be the day that they trap the bears, being on Friday. Give it that dip that we had overnight, heading down a little bit lower, and all the bears start jumping in thinking, okay, this is it. And because we've got 2 red weeks in a row, that's it. See ya. Bye-bye. We're oversold all over. And again, it comes out with the same thing as 2018 is the way that it looks. Looks very much like 2018. And like I shared there with, today's SPX minus 1% already busted, 65, 62, 78. The plus 1% algo for Monday starts when we find a bottom today or on the weekend. And again, I can chart, but I can't Trump tweet. I can't forecast Trump's comments or his Truth Social posts. As I shared there, 2018, where was your top on the VIX? Where was the top on the VIX? Right to the October of 2018 high. I mean, it just doesn't get any more video game simplicity than what you have. So, like I say, while I can try and show how the SPX looks very similar to October 2018, start of its minus 20% correction, there you go. You got your VIX 2884. You got your QQQ 590.81 right there. Again, same thing again. And here's your IWM right at 240 again. So, SPX 6629 gap is filled by Wednesday, October 22nd. Most likely Monday, October 20th. Trump still needs to come out later today and tell you again about the war he stopped with India and Iran, how the soybeans and the tomahawk stories, while no one sees the government shutdown is exactly what they wanted. And that's in a bit, much, much, much bigger picture with the nuclear distant alternative for the view of the market. But no need to get into that because I think it's a little bit too much for anybody to really absorb right now. New moon comes on October 21. On October 21, you also have the opportunity, right around sunset, you'll have to check with your local weather stations, but on October 21, the naked eye, 42 degrees from the sun after sunset, you're going to be able to see Comet Lemon. And it's due to be an absolutely beautiful comet. Visible in binoculars about midway between Actionable and the handle of the Big Dipper. So if you know where your Big Dipper is, you'll know where you'll be able to see Comet Lemon. So that'll be in the skies on October 21, which is Tuesday, which is the same day as the new moon, which, as we'll see as we go in here, looking at the SPX, one red week. That was last week. The week that we just had there, we finished, plus 41 points with the ramp up that we had there on Friday after the nice gap down, 66.0376, 66.12, 66.20. Those are our lows our lows in the 6,000s. And then the same lows, 65.50, 65.55, and, fractional low there on Thursday, 65.94. But here we are. So we've got 8 green closes on the month, 5 red closes. But the most significant for me personally, is that we are still below the monthly candle, 6664.92. Fractionally, but we're below it. And like I've shared to you, looking back and having done this for years, having that close green, like we had here in May 6th, getting that green close for the month, that could trigger an enormous push to the upside into the 6700s, embarking onto the 6800s as we have earnings that are going to be coming out next week. We do have earnings this week, but they're not as significant as the ones next week. Hang on one second. So on the spreads, it's been a great week. It's been an amazing week. It's been an amazing month. But, once again, it's a video game. As I do try and go out and find the best available credit, not only for the risk, but for the opportunity that trade will have its every ability to be able to close full credit, it's been a pretty damn good month. Back on to the SPX before I move forward. So, looking at the Fibonacci spiral, from the October 2025 high, it's been almost perfect. October the 12th was due to be the low. Couldn't happen on October the 12th because October the 12th was on a weekend. So you got your low there on Friday, October the 10th. A little bit of a slippage. October 14th, due to be the high. What'd you get? You got your high on October 15th. 1 day off. October 17th, due to be the low. Here's where I had to put a couple of asterisks, because we did get lower. We got down there around 65.42-ish, but it was pre-market, and the Trump tweets came out. And even though the Trump comments about China, all the Fed speakers on Friday, nothing whatsoever was bullish. It's OPEX. Not only is it OPEX, it's OPEX Friday. And like I've said for 120 OPEX is now over the last 10 years, OPEX will rip you to shreds. Quad OPEX, the quarterlies, will rip an investment bank to shreds. So you're always cautious about that OPEX Friday. Anyway, on to the QQQ. Green week, 603.93, 603.93. Why does that matter? 603.59 is plus 50% from your April bottom. That's why it matters. You had your plus 1%, minus 1% day over there on Thursday, which was complete shake and bake. But again, over there with the comments that took place with everybody on Friday. And as you can see here, you are going into the 600s every single day. You are dipping down below the 600s every single day. They're actually closer to 595 every single day. But even with your gap down, which is only your third gap down of the month, your green close, your green week. So once again, after a minus 19-point week last week, you got a little plus 4-point week with very little to show for it as far as what's coming ahead with earnings. Get into that in a minute. IWM, this is where it kind of get a little bit shaky here because you had your nice drop down on IWM. You closed up 1.5 points, but you've had two big shake and bake days. 2 big days after that all-time high got placed, 252.77 on Wednesday. So IWM, definitely going to be something that's going to be monitored very closely as we move forward. But we do have, like I shared, it's going to be an earnings week. Not a big one. It's just a beginning. It's kind of like an earnings teaser. You're getting Netflix on Tuesday after the market closes. You're getting Tesla. You're getting IBM after the market closes on Wednesday. And then on Thursday, your big name is going to be Intel. In between there, I'm sure there are names that people trade. If you trade any of these names, message me. I will be more than happy to share not only the chart, but my thoughts and even look over different options and the pricing of them for you. I do not trade earnings. I don't do it. I used to do it years ago. It's not worth it. Not for me. There's a much bigger picture ahead. We're only into our 200th trading session of the year come Monday. We've still got another 2.5 months to go, 50 trading sessions. There's options available for 2027 on a lot of these names. And I'll go over Netflix, Tesla, IBM, and Intel later on in the video. But once again, you know, you can do what you want with this. But if you take it in any bit of seriousness, you can go back and look at these dates on your chart and look at the accuracy of these dates on your chart. And what we have coming up here is 2026. And again, you can go back, look at the accuracy on your own. It's completely up to you. And look at what you've got coming here. Now, as much as I want to support the nuclear football and swap from the continued one last leg up preferred bullish view, I see so many things that are warning. And I mean, you need to actually put on a tinfoil hat and be a little bit of a conspiracy theorist to think that we would sell off prior to the beginning of a new tax year. But it happened in 2018, so I leave you with that. Let's get onto the charts, and we'll start out here with the SPX. I've got a broader view for you, the 30-day chart over here, just so you can see where you've been, where you've come to, because the only thing that you know is 65.51 and 67.64. This 220-point range, 210-point range. Your 65.51 being your spike down lows on the FOMC meeting, revisited after Donald Trump said, fuck you, China. Fuck you. And revisited again over there on October 14th. And it would have been revisited again there on Friday, early Friday morning, had it not been for a few comments coming out of Donald Trump very early in the morning, well before the sun rose. And you got your close over there on Friday up there at 66.6401. Pennies below the monthly candle of October. Pennies below it. What you see here is something I do not believe in, which are drawings, trend lines, but you've got yourself set up right into a pennant. And this can fix itself to the upside. This can fix itself to the downside. Nobody has the answer for that except Nancy Pelosi. And I'm sorry, man. I don't like eating tuna fish, let alone 78-year-old tuna fish. So I ain't going to find out the answer for you on that. But you have no gaps up above, zero. There are no gaps to the upside. And of your 14 gaps going back to April, they begin below 65.50, or call it 65.60. Again, bringing you back for reference as to not only how 2018 kicked off into that February 9th quick sell-off, your little, fractional little bounce into March with earnings and then back down into April before kicking off into your wedge pattern into the all-time highs in 2018. September 20th, September 21st, and then coming right back to it, October 3, and then you started your sell down into the end of October. So essentially, we're right around here if we were to be in 2018. We're right here. Now, I'm not saying that we are going to be an exact replica of 2018, but I'm sharing that this looks very, very familiar to me. October 30th, this bottomed on October 29th. You go do the figuring on your own. And then you bounce up into November, holding around the same place into Thanksgiving, bouncing back up here into December, where you get into Donald Trump. I got to bring you back onto the browser for this, because I've actually shared this on here. This is a website called the Trump Twitter Archive, and you can go back and look up keywords. You can look up specific dates. You can look up anything that you want. But you come over here into December 2, 2018. China has agreed to reduce and remove tariffs on cars coming into China from the U.S. Currently, the tariff is 40%. My meeting in Argentina with President Xi of China was an extraordinary one. Relations with China have taken a big leap forward. We're dealing from great strength. China has likewise much to gain as well. Where is it? Yeah. China is going to be buying from our farmers. December 3, December 3, December 4. I mean, all of this is just coming out bang, 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 bang after meeting over there in Argentina, which he will be doing at the end of this month, and also meeting with Vladimir Putin over in Hungary. China is supposed to start buying agricultural product and more immediately. And then you start coming down, to later in the month of December, where, he's announced this. If they don't do this, then it's not going to be good. I just had another here, December 29th, after we bottomed. We bottomed on Christmas. Christmas Eve, December 26th is where we bottomed. Very good call with President Xi of China. Deal is moving along very well. If made, it will be very comprehensive, covering all subjects, blah, 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 blah. It's all bullshit. It's all about the charts. We came down here and we were literally minus 20% for 3 minutes. Three minutes. Just like back in April when we bottomed, this recent April, we were minus 20% for 23 total minutes. That's it. But this still looks very much like 2018. I'm not saying it is, but it looks a lot like 2018. So here you have obviously your pennant, which again, I'm not a chart guy with trend lines, but this is what you're looking at. And you can see here how your 20-day and 10-day are going to be here. Your 10-day will be moving down below the 20-day moving average, where the 20-day moving average essentially is pretty fixed right there around that 66.60 plus or minus 10 points. It's fixed because it's 20 days. It's not 10. It's not 5. Your 50-day, obviously 50 days, so slowly creeping up to the upside. But for now, it's got nothing to do with bulls and bears or anything like that. You hold above 66.65, you've got a very good chance and a very good shot that you are going to be reaching back into 6700s. You fall below 66.65. You need 66.40 to save you because 66.27 is there waiting, and 66.12 is waiting for any bear to say, I'm going to get short here. Because unless you can break below 66.12, you got nothing. But even if you break it, you got 66.03 right here below you. So it's not a time to be getting into new trades or anything like that. And here you go with your QQQ. Looking at a 5-day just so you can be zoomed in. 590, 590. Boom. 603, 603, 603, 603. And you got your earnings coming out as we progress into the next couple of weeks with, again, the FOMC meeting, as well as Trump meeting Xi and Trump meeting Putin. But like I've shared, if this is going to be a textbook, which, textbook is, I don't even think they make them anymore. The dip on the QQQ to match the dip on the wave 2 would take you down minus 40 points from 613, so it would be taking you down to around 575, 574, somewhere in that area. On the VIX, once again, looking at this from your broad picture and your very well understood VIX. I mean, come on, it just doesn't get to be any more significant than going and hitting the October 2018 highs right at 2884, as I'm trying to share that this looks a lot like 2018. And where do you go at the end of the day there on Friday? You go back below 2102. So zoom out here on the VIX, little 180 days. Well, I don't think we need to go 180 days. We'll come in here into May after things kind of settle down. You get your spikes on the VIX above 2102, but you don't live there. You always come back. Here's your fire Jerome Powell. I don't remember what the event was on the beginning of August when we had that 3% sell-off, but here's your spike above 2102. Here was a major buildup above 2102 over the course of these last couple of days. But here we are reclining back below 2102. So this is not a time to get bullish. And anybody who's going to be into a bearish position that's not doing zero DTEs, you had your chance. You had your opportunity to build positions prior to this. So now it's really allowing them to come to fruition or allowing yourself the window of 2 weeks to let it all settle out. But yeah, here on the Dow Jones on DIA, nothing. Nice dip, but nothing. Nothing has taken place. Come over onto your IWM, and again, with the IWM, looking at this from a semi-zoomed out point of view, you're 240, you're 240. But from a bigger point of view, you're still up here in this wedge with everything that you could possibly say to have hit your top targets before you get your pullback, which should take you down below 230. You're in a waiting game, and that's simply where you are. So that's really what I got with the indexes, but what I'm going to go over here now is just a couple of things which I'm finding, part of this Rubik's Cube nuclear football that I can't put it into a paragraph. I mean, I've talked about the bigger, broader, wider view with every one of you, but I can't put this into a paragraph as of yet. I've got a lot of stuff that supports, but I can't put it together myself. But yeah, here on silver, 50.43, perfect top. You're close to it, 49.25. Over on gold, like I shared with you, 43.86, 43.23. Very good top warning before you're due to get a pullback. And as you saw there on GLD, throughout the alert to you right here around 390, you hit 403. Then you had your little dip there down to 385 on Friday. Nothing big, but your trade worked on GLD if you took the December 360 puts. Now, these gaps to be filled, And the bigger, broader, wider view of things is how you see here gold. Gold just kind of just chilled for an excessively long period of time. And then right here in the beginning of this year, as the United States had $10 trillion worth of debt that was due to, be refinanced this year, gold started making its run. Now there's another, 9 or 10 trillion that needs to be done in the beginning of next year. And here's gold. And that all goes together with that, I can't put it in one paragraph, nuclear football, with the government shutdown as the laces on the football. So it's just a big, huge warning for everybody, because whether you like it or not, you're getting close to the very end of the end of the end of the end. And you live in the United States, you go out to eat, you drive. How's things look? They look good? They look great? If they look great, I'm happy for you. I hope that everything stays great. And then you come on to crude. Crude coming down here to the April lows. Something's happening. But more significantly, looking back in a bigger, broader, wider view of things, once again, this was February 11th, 2016, after we had this major crushing from the 2014 highs. And I remember calling the alert because it came at 2:31 in the afternoon. We knew that crude was going to be making an alert. We knew there was a 230 algorithm, and we got out of puts, got into calls 1 minute before the announcement came out that OPEC had a deal. But you had your drop down here to 26.05. Here was your lows back in 2009 when the market crashed down here at 35. Here's your lows, which were actually negative when COVID happened. Negative oil. And here you are, pushing on 55. So something's out there. I'm telling you, something's out there. And if you're going to be bullish and, consider, oh, well, my 401k looks good and all of this is cool, I really do hope it works out for you. Tesla going to be reporting on Wednesday. Again, I remember putting this alert out here back in May 2024. Tesla's got upside minimum 193. 3 days later, it's up here at 198. Unbelievable. But yeah, on Tesla, looking at this from a big, broad, wider view, got a nice 1-2, perfect 3, big, huge, breaking all the Elliott wave rules 4. And here you are where this would be a C equals A, perfect 432. We've talked about Tesla quite a bit. Now, looking at this and looking at it from a different point of view, we come over here, and we come all the way up here, and we come down to here. And what you come out with there is Tesla has a minimum upside of 560. So if you think 560 works, these are old drawings from when they had their split, which I haven't made any changes to. This is another one, old drawing. If you see 560 on Tesla, well, 530, 560, 591, those are your upside targets, and they're going to be reporting earnings on Wednesday. Netflix. I can look at Netflix 370 different ways. I got a big 1, I got a big 2, I got a big 3, and this 3 works out perfectly as you come off the 2022 lows. When you drop down, I don't remember how many points it was, from 700 down to 141, 187. 218 to the upside, 94 to the downside, 779 to the upside, 243 to the downside, and this final leg up here being virtually 2.5 or 2.2 times what you were on leg 1. Right there, 520. I can't call it any better, but that's what it is. Netflix is really weird when it comes to earnings, but Netflix is due to be making a retracement down to around 1,000, down to, just slightly below 1,000 before it gets that bullish wave 5 for the final last run. IBM. I got IBM for you here going all the way back to the entire history of IBM. Pretty clear. 1, 2, perfect 3, right there at the 123.6. Textbook Elliott wave, textbook Elliott wave. Your wave 4 decline, not good. Breaking below 1, not good, but still very possible. And coming off of your lows here from COVID, which will just come into a 5-year, so you can see it a little clearer. Obviously, we're a little bit lower because COVID's not on the chart here. But a nice wave 1, wave 2, as you went flat, went nowhere, still continuing to go nowhere until around April 2023, when all of a sudden they recently invented AI, and at the end, right around 2 years ago in October, IBM started to make its move, started making its move, and here you have an extremely extended wave 3 or wave 5, however you want to look at it, however you want to count it, but right to a perfect Fibonacci there at 298.09. So with IBM, I'd be looking for a retracement back to around 268. 268 breaks down. I'd be looking, no doubt, with 240 being the support. If you do break below 240, you're already going to be seeing other things taking place because you're going to have SPX trading in the 5900s. And finally, Intel, which reports Thursday after the market closes. Again, just a complete, total piece of garbage. I would see absolutely no reason to be involved with this other than if you are one of those people that loves buying orange dildos and inserting them into your mouth. Your lows here in August at 1897. The U.S. takes a stake in Intel, your big spike up, retracement down below 30, and here you are floating around 36.11, right around the 50 retracement from the all-time, or 50% from your all-time highs, which we can actually look at, with this being the maximum view. So, again, if you think that Intel's got a shot, you're looking at 43. If you see 43, that's probably your best opportunity to get short. But where we are right here in the middle, I don't see any reason to be involved whatsoever into Intel. And I apologize for taking up too much of your time. I know you all want to go and watch your football. You want to enjoy your time outside with your children. Weekend Wall Street, now it's showing down 44 points. Again, we got the new moon coming up here on October 1. We have the Fibonacci spiral date, October 22. We have the comet on October 21, which I hope you all get a chance to watch. And again, 2026, 3 months away. It's up to you.